Why invest in blockchain ETFs? They can make you rich. A relatively new technology is blockchain. However, businesses involved in this sector are well established. Examples include businesses like SAP, IBM, and Amazon.com. Businesses looking to wager on and invest in this technology choose to buy stocks from regulated businesses. Stocks and businesses engaged in the blockchain sector are owned via ETFs or exchange-traded funds. This lesson provides information on blockchain ETFs, which are assets and securities based on the blockchain. We'll talk about what ETFs are, how they work, why you should think about investing in them, how they compare to other investment alternatives, and how they vary from them. We'll also give advice and a list for those who want to buy these products. Before starting, don't forget to like and subscribe to our channel. Let's start. What is a blockchain ETF? An exchange-traded fund, ETF, is a kind of investment that is based on an underlying asset with some sort of value. A blockchain ETF, for instance, focuses on investing in blockchain assets such as virtual currencies, equities of blockchain-based enterprises, or crypto trading activity, to mention a few. A blockchain ETF does not always invest in businesses that deal with cryptocurrencies like Bitcoin. However, a person invests in the assets when they purchase an ETF. The value of their investment in the fund will determine the extent to which they are entitled to benefit from the development of the underlying assets. Like it would have occurred if they had owned stocks, they do not own the underlying assets. As a result, investors benefit from the fund's growth in the form of consistent dividend payments. Similar to how people may sell or purchase stocks in the stock markets, ETFs are likewise exchanged in the regular ETF exchanges. As is evident, while the excitement and other elements surrounding blockchain may have an impact, the values of stocks of these firms are influenced by variables other than blockchain. Blockchain ETFs differ from Bitcoin ETFs or Ethereum ETFs in many ways. While cryptocurrency ETFs are based on the value of underlying cryptocurrencies like Bitcoin and ETH, blockchain ETFs are based on the value of the underlying blockchain technology. In other words, a Bitcoin ETF would monitor the market price of Bitcoin, but a blockchain ETF would monitor the stocks of businesses investing in blockchain technology. For instance, the latter would take place using Bitcoin futures on CBOE and CME. Through ownership of the futures contracts, the ETF watches the price. Furthermore, while blockchain covers a broad range of topics, Bitcoin is only one use case for it. Although the law is clear that blockchain ETFs are lawful, several authorities continue to prohibit Bitcoin and cryptocurrency ETFs because of liquidity and valuation issues. Compared to Bitcoin ETFs, blockchain ETFs are less volatile. How do blockchain ETFs work? In addition to being able to profit from advancements in the expansion of blockchain technology, investing in ETFs has a variety of other advantages. For instance, the Reality Shares Nasdaq Blockchain Economy Index is tracked by the BLC and ETF. Stocks of enterprises engaged in the study, creation, maintenance, and use of blockchain technology, as well as related businesses, make up the index itself. A score known as the blockchain score is given to a company's stock when it is considered a potential candidate for inclusion in the index. This score is based on a number of variables, including the company's contribution to the blockchain ecosystem, its blockchain products and economic impact, its investment in research and development, as well as its outcomes and innovations. Of course, the firms included in the index are chosen as the top contributors to blockchain via the indexing of performance across a broad variety of parameters related to blockchain. But this is not necessarily a genuine picture of the situation. Since the fund receives contributions from investors, it employs indexing to choose the top equities to purchase in the context of the blockchain economy. The investors then get a piece of the fund's growth or earnings from stock speculation and sales in accordance to the size of their initial investment. Dividend payments are the primary method of profit distribution. Monthly dividends are one way that Bitcoin ETFs might distribute earnings.